sitting down today to talk about whether or not the setting up of an LTC is the right thing to do to own a residential investment property. And we've got Garreth Collard here from EpsomTax, and we're just going to throw some questions at him about LTCs. What are they? Who would benefit from them? And get his expert opinion on whether or not an LTC is the right way to go. So, I guess first of all, Gareth, what is an LTC?
Well, it's a look-through company, and as the name implies, any profits or any losses, you look through the company and see who are the shareholders, and those profits or losses go against that person in their personal name. So the company really is it's a flimsy little structure. You look through it, it doesn't pay any tax, anything like that. It all goes against the individuals who are the shareholders in it.
Okay, so it's sort of similar to what was an LAQC? Why can't we use LAQCs anymore?
Yeah, it has some similarities. What happened was that the LAQC, the loss attributing qualifying company, the company would pay tax at company rates on its profits, and if there were losses, they would flow through to the owners. And so that created a bit of an imbalance, at least it seems the ID felt that way, and they decided to get rid of that arrangement. So what they put in place of it is an LTC. So you can't form an LAQC anymore.
Okay.
And the existing ones have had to be changed into either a QC or an LTC. So we see a lot of this look-through company, the LTC, in the rental investment property scene. It's a good vehicle to allow those losses, hopefully, to flow through and offset the income that the shareholders are getting.
Okay, so we have many varied clients that come through Goodlife. Gareth, who do you think would benefit really from setting up an LTC? Who should set up an LTC to own an investment property?
Well, my mum and dad should have set one up, if you're watching, mum and dad. But in all seriousness, it's couples that benefit from it, or groups of people.
Yep.
Recently we set an LTC up for some siblings that want to go into a house together, make it all above board, and so there'd be no problems. You might get a group of friends that want to combine for a investment property. Partners, husbands and wives, that whole sort of scene there, wherever you've got two people or more, an LTC is the way to go. Okay,
so question that I've got then is, what about single people? Do you think single people can benefit from owning an LTC? Why? Because I understand it's about losses and splitting those losses. Why would a single person want to set up an LTC if it's them that needs all the losses and they've got no one to split it with? Surely it seems that they wouldn't need an LTC, is that right?
Well, it's a personal decision, but for right now they're single, but they may just meet the love of their life tomorrow. And so if their rental investment property is owned by an LTC now, it just reduces complication later. Because you then have to form the LTC and sell it to the rental property to the LTC. You've got to get a solicitor involved, and that all costs money. So often, for the relatively inexpensive cost of getting a company set up, just say to yourself a favour. Believe in yourself. Believe you're going to meet the love of your life, and set up that LTC now, even if you're a single person.
Okay.
You can't bring your dog into the LTC as much as you love him.
All right. So what about partnerships then? Because that's another, and we meet a lot of people that own property in a partnership. We commonly recommend LTCs, but why not a partnership? In your opinion, which is better, partnership or LTC, and why?
Well, we would definitely say LTC. And the reason is this, that you can change the shareholding and therefore change how losses are apportioned with an LTC, but you can't do that with where you've got two people just combining and buying a house in their own names. So let's give you a scenario. You've got John and Mary. Mary's not working at the moment, so John is the sole earner. And so we could stack the shareholding more towards John, so that maybe he's 95%, Mary's 5%. That way, most of the losses are flowing through to him and reducing his income. But let's imagine that in a few years' time, that Mary decides she'll go back to work, and she gets a job where she was, and actually she earned way more money than John ever did. So now we can change the shareholding to offset that higher tax bracket that she's in, so that you don't get that kind of flexibility with a partnership.
Right.
The downside is, there's a little more compliance, because you've now got a company that needs a return,
Mm.
but all of those costs are 100% tax deductible anyway.
Okay.
So we would still say use an LTC. It's a recognised vehicle. The ID's obviously put it in place for a reason.
Okay.
So let's use it.
Okay, so how does one set up an LTC then? How does that happen?
Well, it's a two-step process. The first is that you form a company with the New Zealand Companies Office, and the second is that you apply to the IRD for an LTC election.
Okay.
So it's, you know, a bit of paperwork, but it's relatively straightforward. But you can sometimes get at least the first part turned around within a couple of hours, and then just wait for the ID to do their bit.
And you do that for people? Or?
We do that. I must
Okay.
confess.
Yes.
Yeah,
Okay.
yeah. It doesn't break the bank because it's not hugely expensive to
Okay.
set up a company.
Okay. So EpsomTax can help set up LTCs for clients, and they have done for our clients too. And the management of that LTC, I'm assuming that's something that you would be actively involved in?
Yeah, there's things to be considered. Of course, whenever you've got a rental investment property, that has a return that needs to be filed every year with the IRD.
Mm-hmm.
The LTC itself needs to file a return with the Inland Revenue. The shareholders need to file tax returns, plus the Companies Office requires an annual return.
Okay.
So there's a little bit of compliance that needs doing, and again, though, those are part of the costs that you can claim back, and hopefully then bring those losses against yourself as a shareholder of the company.
Okay. So it's very important for our clients that we have them married up with good accountants. Obviously, that's top priority for us. So now's your chance to do a bit of a pitch. Gareth, how do people contact you? How do they get in touch with you if they want to set up and have, or even have their LTC managed if they've already got one, or switching LAQCs or whatever? How do people get in contact with you or EpsomTax?
Well, the easiest thing is to go to our website, EpsomTax.com. That's spelled like the suburb Epsom, and tax like what we hate paying.
Yeah.
And our contact details are there. We've got our toll-free number, 0800 890 132. Don't let the name fool you. We started off in Epsom when we first got married, my wife and I, but we've kind of moved around, and some of our clients are in the South Island, so we sort of cover the whole.
So you're New Zealand wide pretty much?
Yeah.
Okay, great. All right. Well, thank you very much, Gareth, for that. That's hopefully dispels some myths about LTCs, LAQCs, partnerships and things, and how that all works. We certainly endorse the recommendation of LTCs, and I guess people can get in touch if they'd like to set one up or have one managed.
Yep. Thanks for your time.
Thank you.